FX. I have to add that FX there for the TikTok people to understand. But then we do it. We've been doing this since last year, and we've had amazing success rate. Amazing success rate. So that is why we're coming here this morning. MJ, good morning. You're welcome. How was the weekend? Yesterday I crashed out. I didn't even go to church. It was crazy. But then we're here again today. And I hope that this week will bring us good fortune. Last week we closed the week with I'll show you guys, so there's no need to even rush. And I've finally gotten the journal of what we've been doing since the year started. I normally don't do it, but I have to do this because I've stopped signal provision on the channel, and for me to keep tabs of what we've done, I have to do this. So that is why I stopped doing that on the line and then moved it here so that everybody can see it equally. So that is it. So now we're good to go. So like I said before, welcome to Monday market analysis. This is not aligned yet. I think it's better now. Yeah, so we're good. So last week, what we did, USDPY, yeah. So last week we did the same pairs. We don't do different things. We do the same pairs every time. The same pairs every time. The same pairs every time, week in, week out. The same pairs. The same. We don't change it for anything. Even though we analyze a pair for you, we did something for you, it remains for you. Like it remains for you up until we want to change. So anything we analyze is for you. Anything we touch is for you. Just for you alone. Just for you alone. So last week we said that this guy is going to sell. He's going to buy, of course, but he's not going to be buying from this place. He's going to buy him from here. So now there's a lot of lines, a lot of charts, a lot of all this. So I'm going to remove all of them. I think it's better like this. Just ahead. I think it's better like this. Yeah, it's better. So these things that are all touching each other, and to you it looks tacky and not organized. That is how I keep my charts clean. So first off, we'll start by removing all of them. This one has done his job. Now you're good to go. This one has done his job. Good to go. This one has done his job. Good to go. This one has done his job. Good to go. This one should end here. Clean it up. Then this one has done its job. Good to go. This one has not done its job because everything that price has touched them has not broken above it. So the job is still in progress. This one has done its job. Good to go. And then we are good. So all these ones here are important. They are all important. I've removed all the lines here so that you can know. So this one is still here because price has not come back to this place. Why did we check that place? Keep dragging it to this place. Yeah, somewhere here. Good. So why did we not remove all these ones? Because from the daily time frame, we said something the other time that price has taken out. Yes, it's from daily time frame. Price have taken out this lows, all this liquidity here. Price should at least come to this place. From the daily side, it will come lower. That's from the 4-hour time frame. That is from the 4-hour time frame. Price has reacted from all these places and then leaving this long as liquidity, if I call it that, leaving it empty. And I've said this thing before in the class during our sessions for the YouTube people that once price takes out liquidity, the next thing price is going to do is to do what? Is to take it out like this and then react to the POIs available there. So there's this massive FVG inside here. Very massive FVG. FVG. But it's going to be massive. I'm going to make it to be like 50 or 40. Yeah. Because it's very massive. It's very massive. Very, very, very massive. 40 is the largest. So there's a massive FVG inside here. So this FVG has to be triggered for price to continue rushing to the upside. But price just kept dancing around here. Because if you ask yourself, from the where has this guy been for the longest? So the longest place we are looking for it to come to is this place. This place, after this place, then this place. So let's see it. Yes, after price reacts from this place, the next one is from this place. So from key level to key level, that's what price does. Price reacts from key levels to key levels. So you cannot say that, oh, I'm now doing this. How do I now do it? Why do you think price is going to sell from here? Why this one? Why that one? No, keep the whys and then just follow the structure. Keep the whys and follow the structure. Price has been bullish from May 2026 till current price action. So if you just wake up on the market and then you bought this pair from May, best believe you still be in profit till now. So someone cannot ask, how long will I keep buying? How long will I keep buying? You don't really, that doesn't really matter. The point is you bought when the price is very, very low and you sell when the price is now high. That is trading for you. Sell low and then sell when it's high and then buy when it's low. But the point is, are you going to be buying when everything is in order, or you just want to stay there and look at the market do nonsense? So that's why we said once this market is overbought from this angle, we are expecting it to dump to this invalidation, to this what is it called again? To this fair value gap here. Once it dumps here, we can now okay, price is back here. We look for the same thing again and then we sell. And now price got to this place and rejected and then we sold. But that sell was short-lived. That sell was short-lived. Why was it short-lived? Because it just sold down to this place and started rejecting back. So my bias for here, it is still solid. It is still solid. What if price comes back to this place and sold back? So I don't really care. My own is I want price to come back here, reject back here, enter this FVG, and then start rejecting and then buy again. But if that did not happen, if price just started from here and breaks this body, once it breaks it with a body and comes back, we will continue buying till this guy. Remember, this is the guy we're looking out for. But before this one happen, this is my main scenario, and then this is other. These two can happen. So having said that, I'm going to be sending it now to the Telegram channel. Sending down to the Telegram channel. So now copy image and send. This is what we do every Monday. Copy the image and then paste. The pair is what? Paste, my bro. Ellie, welcome. Welcome. The pair is what again? USD card, right? Yes, USD card. So USD card, buy bias. The bias is always buy, but only buy on confirmation, because now you can't just put your steps, your buy limit, and hope that price will just come to your place and then buy from there. No, it doesn't work like that. It doesn't work like that. This thing is not clean at all. I'll find a way to make it cleaner as they go by, because I don't want to mess up your eyes. I think if it's from a tablet, it will work. But I don't know yet. I'll ask Tolu. Tolu did yesterday. I'll ask him. So for the GBP USD, there's something different that we did the other time. For the GBP USD, we said that price is going to come into this place and then it will sell. Come into this place and then it will sell. So now the question is inside here back? Is it gonna sell? Of course. Let's see how it goes. Remember, you have entered the FVG, and MJ, this is one that bothers you. Who is this? Obi Daniel, you're welcome. You're welcome. So MJ, you are here now. So let's see how that your pair goes. It's not your pressure, but then let's see how it goes. So having said that, it has entered our deeper half already. So everything that we want to make in this place has been met. This is our deeper half, 50%. You have entered inside already. So now, what are we going to do on this guy? What are you looking for? A breakout. You're not going to look for a breakout from the 4 hours. No, go to 1 hour. From 1 hour, you can see that price have tapped where I wanted it to tap. The first tap is even here, this particular one here, that's tapped. And this is the low that I created. This is the low that I created. This is the low that I created. And then that one did not break. It went up again and tapped again. And this is the low that one created. Has that low been broken? Of course, yes. But then it's not me. I'm not the judge. I'm not the judge. You be the judge. You are the judge. This is it. So this is the low. This is the first low. Not broken. This is the second low. This first low and this second low, which one was broken? Which one was broken? What am I saying? Which one was broken? Is it the first or the second was broken? If you want to come up, send your request and come up. Trade with Bright, you're welcome. Which of the first lows were broken? Of course, it's this one that was broken. This is broken. This has been broken. So remember, this one hasn't been broken. So this one is more likely your first target if you're selling. So now, what do you do? Simple. This, you have a liquidity zone right here, and your sell should come from here. Remember, this is all from line chart. It's all from line chart. These are where the volumes are. These are where the volumes are. So let's go back to the candlesticks. Simple, very clear. So price has tapped here, went down, broke this low. So now you're waiting for price to do what? To come back to this place. And simple, this is your SL. Your main SL is this. And remember, I told you, MJ, this one I've happened to use severally. What am I using 21 pips SL to do? Just put it somewhere above here. In fact, make it 30. You will not die. 30. You will not die. Your TP1, 1:3. Here. 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 Boom. Here. Why did I put it there? Because here again, there's a fair value gap here in 1 hour. Look at this FVG here in 1 hour. So what if price comes here and start doing nonsense? You don't know. So then you have any lows here to watch out for. Many lows to watch out for. This one has liquidity inside. If price taps it, price can come into it and do like this and reject before coming back to take it out. But your overall takeout, oh shoot, I don't do nonsense. Your overall bias is go back and then break. Good. The overall, what am I speaking this morning? The overall sentiment is bearish. Is bearish. But it doesn't mean that this thing will not fail. Oh. But just once it follows your plan, shoot. Once it follows your plan, shoot. Your job is to shoot at confirmation and then manage your risks. The other one, the market they do, that will not really concern you. Your job is to enter the price on your confirmation and then wait for it to play out. I didn't say go and risk all your portfolio on this pair. I didn't say go and do nonsense. What I said is this: follow your plan. Follow your plan. If it meets your requirement, shoot. What is the worst case? What is the worst thing that happened to you? Stop loss. But remember, we followed everything. We followed it to the T. That is what makes you more happy. That is what makes you more happy as a trader. That, oh, this thing I said price would do. Price did it. Price did it. That what makes you happy. And then when you follow these plans, do it 10 times, do it 100 times, you will see your results. You see your results. So now, this is the entry, 1.33593, and then this is the stop loss. This is your TP. I use 1:3 because it makes me sleep well at night. I cannot, yes, price will most likely get to this place. It will most likely get to this place. But the question is this: how many of you have the balls to hold it down to the 6%? How many of you? So remember, the higher your risk to reward, the higher your stop losses. It's very simple. The higher your risk to reward, the higher your stop loss. Because price might decide to come back here and then reject from this place, go back in again, and then most of you will chicken out. So that is it. If your psychology is intact and you're sure that you can see your 5% go back to 0%, go back to stop loss, and you will not cry, then go ahead and do it. But then if you think that you cannot deal with it, you cannot hold it, then why not take the one you can and leave the market? So having said that, I'm turning it now to the group. We send the first one. This is the second one. Paste GBP USD. Thank you. GBP USD. Sell limit order. This one is not a bias again. I saw the limit. Sell limit order. I'm saying this one again now because I don't have a paid VIP entry group again. So risk management applied. In my free group, I always say it: if you're trading a prop account, make sure your risk do not exceed 1%. If you're already on a live account, make sure your risk do not exceed 0.5% to 1%. I have been trading a prop account for the past 6 months. Can you do that? Good morning, Amy. Can you do that? I've been doing it for the past 6 months. Can you do that? That's the question. Can you hold an account for a whole month? Jesus Christ, this thing have left us. So, do you guys remember last week? MJ, did you see this pair? Did you see? It left us. It left from, oh shoot. Once market opened, the guy ran. That is crazy. That is crazy. Are you seeing it? So last week, I said this thing last week. On Monday, look at it. On Monday, last week, look at it here. June 30, that was Tuesday. On Monday, 29th of June, I said that the price will come back to this place. And then from this place, we can now buy. And then this happened on a Thursday night. Then on a Friday, it started going up. And I told you guys, I'm not going to touch it. And then on Monday morning, we'll find our buy. But that Monday morning did not come. This is Monday now. It just opened on Monday and then bought. So you wait for your confirmations and now you enter. You don't just come there and do nothing. No, it doesn't work like that. If you want to come up, send your request and I'll bring you up. But we're almost done, chat, so no need. So now what do I do here? Nothing. Because price did not wait for me. As it not wait for me, I will not go and pursue it. What do I now do? I'll now start looking for re-entries. Re-entries. Meaning, is there any way that price can give me second chance? let me follow and start eating from this label, even though I waited for it all night, but it did not come back to me. Is there anything that price will do for me so I can enter and follow the price to the place it's going to? That is what we're going to look for now. Re-entries. It's called re-entries for a reason. Re-entries means that the first entry has moved. Now I'm looking for another opportunity for me to enter the market from. So that is it. So let's look for if we can get one. But your re-entry should still be from the places you marked out before. Let me go back, put this in somewhere here. So because that one don't pass. It don't pass. It has done its job. So now from this place, and this one has passed too. So delete. This one, has it passed? Yes, it has passed. So delete. Good. Because I like a clean chart. I love a clean chart. Don't want to make it so tacky. So I love a clean chart. So now we're good. So now, remember, this guy fell down to this place and rejected from this place. Right. So what you're looking out for, look at price came here, did this, did this, did this, did this, and broke out. Let me show you outside. So if this is a bearish market, and from here, so selling, break of structure down, break of structure down, break of structure. This one now liquidity. So price took out this high and then took out this one. This is double break of structure. Double break of structure. So it has, this first one is called MSS. But for old schools, for the old school guys, it's called this. For the old school, it's called this. That is called what? Change of character. It's called change of character. But then the new school are calling it this. The new traders are calling it anything to make them sleep all at night, like MSS, meaning market structure shift. Market structure shift. When it shifts from bearish to bullish, that is market structure shift. When it shifts from bearish to range, that is market structure shift. When it shifts from bearish to range, we have three market structures. It's even two, but then the bullish, and then the bearish, and then the range. These are the market structures that I have. This one is when price is doing something like this. Let me just draw it. Something like this. This one is doing like this. This one is like this. Just the same place. No up, no down. It's just going the same way. So this one is when it's going up. This one is going down. This one is just in the middle doing nothing. So when this one, when they go up now, turns and start doing like this, he did this. That thing that happened here is called market structure shift or change of character. When this one going down, start doing this, going up, this that happened here is called market structure shift or change of character. When this one stops ranging and goes up or goes down, that act of changing your direction to the next direction is called market structure shift or change of character. Remember, this is not mentorship class, I beg. So I just want to show you guys on TikTok before we continue what we're doing. So now that these guys have done those things, what are you looking for? You look for any entry price, any market structure inefficiency around those pair, that place for you to enter from. Now we have two here, from the OB and then second from a fair value gap. Let me show you now. This is it. This is your break of structure, right? This is the place price is broke. And this one now is the double break of structure, no problem. So from this place now, remember, what we trade is market structure, liquidity, and POI. It's called SLP. 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 So that means structure, liquidity, POI. Structure, liquidity, POI. Structure, is it buying? Is it selling? Liquidity, Where's your liquidity? So now that this kind of broke structure is bullish now, right? Where's your liquidity? After that structure break, where's your liquidity? Liquidity is that anything that drags the market. All these things are liquidity. This one's is liquidity. Open it up well, you see it. Once market breaks, that's the first pullback after a break of structure is your liquidity. This is your break of structure here. So this thing here is your liquidity. This thing here is your liquidity. And that liquidity, you have what? You have fair value gap under it. So this particular one is my first entry for this entry. But the main one, what would they do? Now, fair value, breaker block and POI. Breaker block and POI. So these are the entry I'm looking for this guy to come back to. But to be honest, the only one that is most likely to come back to is this one. This one will engineer the liquidity to come back, and it will tap here and it will continue going. So this one is my most recent, and your TP should be around this place. Your TP should be around this place. Your TP should be around here. So let me put it here. Boom. Here. Why is it there? Why is it there? Because that is where the price got to before it rejected. That is the first external range liquidity. Because price moves from liquidity to liquidity. So once price comes to that place, it's most likely going to take it out and then continue going. Thank you for the taps. Thank you. So that's where we're going to take the trades. I'm not putting it there, but I can, most especially, I will put my limit here. I will. I didn't say I can't. I will put my limit there, because price is most likely going to come back there. 0.3 is 3.7, but then your top loss is 3, because price cannot just come and take out and keep going. Once you've seen your, let me put it there because you can't see that wrong. So from here, price can now start bouncing up. From here, price can now start bouncing up. Boom. All right. Yeah, we're good. So this is our second entry. Now you've seen how I got this entry. You see how I got it? I didn't just put it because I want to. No. I didn't just do it because I feel like. It's not what I feel. No. You don't trade feelings. You don't trade what you feel. You trade what you see. What are you seeing? You trade what you see, not what you feel. So this is what I'm seeing, not what I feel. So for USD-JPY, I believe that this guy is going to come back here and then continue correcting. And for you to know that it's going to come back, look at this FVG here. Look at this FVG, this fair value gap here. That's where price is currently. Are you seeing it? That's where price is currently. So it's going to respect it a little bit and come back. But to be honest, USD-JPY is easy to catch. Sorry, it's hard to catch. It's hard to catch. Let's go back and you see it. This one was missed. This one was cut. This one was missed. Are you seeing it? The same thing. Carry this now. Come. Remove itself. Don't pass. Look at it. We said it, that price has broke structure, liquidity, POI. Look at it. He did not come back. He did not. He left us and ran. The same thing here. Look at it. Price has broke structure here, liquidity here. He left us and run. The same thing here. Like the guy they run. The guy does the run. This thing happened here now. It's something that's happening here. So let's hope that this one come back, because most times the guy does go wrong past you. So let's see how it goes. And remember, are you seeing how I'm keeping journals of things that have happened before? I'm keeping journals of things that have happened before, because you're not a trader if you don't have proof of what happened before. We are only predicting the future by what has happened. That English, is it enter? Yes, we are predicting the future by what has already happened. That is what is that's what we are doing here. So if I ask you this thing that you're telling me now that will happen, what gave you the mind? What gave you the what's that English again? What gave you the assurance? Yes. JPY. Sell. No. Buy limit order. What gave you the assurance that it's going to happen? Nothing gave you the assurance. It's just that you've done this thing severally and it have happened before. That is why. So that's why when people say that trading is gambling, I just laugh at them. I just laugh. Because you can't equate the two together. No, you can't. It's not gambling. Trading is not gambling. Telling you that Paraguay will win France. You can say it. But then when you go back in time, has it always been consistent like that? No, it hasn't. And people that make money from betting, from gambling, they don't throw away risk management. They don't. If they want to be risking now that World Cup is going on, if they want to be risking 1K on any ticket, they are good. But the point is, you are playing 10 games, 10 matches, and putting 1,000. How do you show that 10 of them will come? You don't know. But this one now, I'm only betting on, let me use that your word. I'm only betting on USD card. That's only on this pair that is going to go up or go down. And it's only up or down. So I cannot put USD JPY, USD card, this one, that one, all of them in one trade. I can't. I'm only betting only one. So before you start talking to me about betting and trading, I'll ask you, let me see your ticket. If your ticket has only Man U and Chelsea, no problem. But if there is Man U and Chelsea, Arsenal and Liverpool, New York and this one, that one and that one, in one ticket, you don't tell me that thing is betting. And if I ask you your history, your betting history, and I'm seeing that today you are putting 1,000, next day you're putting 10,000, that is not risk management. You're just gambling. That's what that's the word. So let's just quit the debate. I don't want to have that debate. It's too early for that. So now I said last week, you remember this trade now. All of you remembered it on TikTok here. You remembered it on NVA. You remember this trade now. I said that this guy is accumulating. After the accumulation, it will manipulate. After that, it will distribute. Remember, I said once he leaves this place, then we'll start looking for. And I said that accumulating, this fair value gap below here, that if it taps here, we are good to go. But he did not tap it. Did I jump into the trade? I did not jump into it because he did not do what I wanted to do, and I left it. I have choices to do what I want to do. I know when I want to enter. I know when I want to leave. I know I am the boss. But once you've taken out your trade, once you've taken out your bet on this spot and this bet, you've betted, your money is there. Your money is there, your money is there already. So now, what you say, they ask, what is cash out? What is cash out? Your money is gone, gone. You understand? You cannot alter it again. You cannot alter it again. I can be in a trade and say, oh, this thing is going against me. I'm already up 3%. I'll take out 3% and then leave others to run. I can gently edit my trades. I can be taking profits small. You can take it now because I think there is partial cash out now. But then it wasn't there. So you cannot compare trading and betting, I beg. They are different things. So this is the accumulation that happened. This is the manipulation and the distribute. So now, what are we going to check out this week? For the fact it has broken above this, so we are good to go. We can keep buying. But for you to keep buying, what are you looking out for? We're looking for break of structure, liquidity, and POI. Oh, this one I've passed safe. This is a break of structure. Break. Just came back here and that's what they're going. Oh, this one is dicey. All these things here are liquidity for me. All these things here are liquidity. But now the POI is the problem. There's no clear POI. Go down to 45 minutes. There's no clear POI. There's no clear POI. This one is hard though. There's no clear POI. Even the liquidity itself, even the FBI was covered. I say FBI. The FVG was even covered. Look at the FVG here. Okay, there's FVG here. There's FVG here. There's FVG here. So it means this one is, oh shoot. There's FVG there. So let me just put it. Ah, it's too much. It's too much. It's too much. If I, oh shoot, it's too much. It's too much. It's too much. It's too much. Let's just swing this one. Let's just swing it. Let's swing this one. This one is a swing. Is a swing. Is a swing. But then let's know where we are swinging to. Where are we swinging to? Where are we swinging to? Oh, this guy has not been anywhere for the longest. Let's know where. Oh, we're not swinging to anywhere. Carry it back. Stay here. So as you can see, oh shoot. As you can see now, you've seen that price has been consolidating for the longest. Like you're seeing it now. It has been consolidating for the longest. So nothing happening, just going up and down, going up and down, nothing is happening. So that is why you can't just wake up and then say you want to leave it like that. So that's the problem. So that is why it was losing like that. So how do we do it now? You see, no break of structure here. Break of structure here, correct? Break of structure here, and then this one came back again. This is the break of structure here, and then this is the higher low, and then price came again. You did not break this one. What did he do? He broke this low. That is simple accumulation. Simple accumulation. But finally, now it has broken it. So now you are now ready to buy. So from that place, you can now buy. So I'm comfortable with my buy. I'm comfortable with my buy. I'm good with my buy. As a matter of fact, I'm good. I'm good. I'm good. I'm good. So I'm good with my buy. I'm good. So if price comes back here, we're going to buy from there. So let me put it that 4 hours. So that 4 hours is better. Make people know why they buy. Why will you ask me, hey, why are you buying from there? Why are you buying from there? And now you see the reason why I'm buying. But then this is what? This is aggressive. This is aggressive because, and that's the reason why I stated my stop loss to this place. My stop loss is somewhere here. You know why it's there? You know why it's there? If you've been in my key level class, you know why it's there. Because when this price, there is this fair value gap here, and then this candle tapped it and rejected, and then after it rejected, it closed above the 2, and this last one closed above this one. So if price is coming back up, back down, it will not come back down and sweep all this place, because this place has already done its part. It has closed its part. For you to know that there's no middleman in candlestick confirmations, it must close every open spaces that it have created. So that's why I put my stop loss here, because these 3 candles have done its job, and this 4th one closed it. So if this thing is pulling back now, highest thing to do is to sweep this one, and if you sweep this one, I'm still covered in this SL here. So that's why I choose that SL. So I'm not just speaking English. This is not just mere English. You see it on Friday as it plays out. You see it on Friday, whether it poured me spit in my eyes or it respected my bias. So I'm sending that now. We have less than 12 minutes to go. We have less than 12 minutes to go. So send this one, and then we'll look at the news we have for the week. The news we have for the week. The last one is GBP card, Abi. Yes, GBP card is buy limit order. Risk management applied. Boom. So we had. Did I? Ah, I did. Oh, ah, shoot. I don't go press nonsense. No,
I don't know what happened, but I'm so sorry, guys. See you guys on Friday. I've dropped every pair on Telegram already. So go to Telegram and take the trades. And like I always say, please risk appropriately. Please risk appropriately. Thank you guys. See you on Friday by 9 p.m. Bye.